This is Pranav Rao from Smartkarma, and I'm pleased to have with me today Sameer Taneja to discuss his deep dive on Asian terminals. That's ATI PM. Sameer, thanks for your time today on the 22nd of July.
Good morning, Pranav.
Hey, in brief, could you profile Asian terminals for listeners?
Sure. Asian Terminals is a listed container port terminal company in the Philippines, and it provides services of loading and unloading goods for exports and imports. In addition to that, it also provides passenger, cruise, and ferry terminal services. The company has several major assets, and the two most prominent are the Manila South Harbor, of which it owns 100%, and it accounts for about 80% of its volumes. And the port of Batangas, which it owns about 99% of, and that accounts for a balance 20% of its volumes. Also owns a stake in Santos, the port of Mindanao, about 36% of that. The company has been granted these long-term concessions by the Philippines Port Authority, that's the government, which is then in turn responsible for setting tariffs on all the services provided by the company. The company is about 32% owned by Eusebio Tanco, who's a renowned businessman in the Philippines for his interests in education. He owns STI Space PM, and also online gambling through the company DigiPlus Plus Space PM. The company also has a ringing endorsement from DP World, which is a company owned by the Dubai government, which owns about 31% of the company. All in, there's about 16% free float.
Got it. Thanks for that, Sameer. Why is the company exciting to you now?
Sure. So the company has been a steady eddy, which has been growing for the last 10 years. It's got a 5% CAGR volume growth for the last 10 years and a 4% price growth. This is very important because that's resulted in net margins going up over the last 10 years from 20% to 28%. And that's also resulted in the earnings more than tripling over the last 10 years. And the company demonstrates this ability because it has a comfortable duopoly in the Manila South Harbor with the bellwether ICT, listed in the Philippines as ICT Space PM. So as a result of that, they've been able to negotiate pretty well with the government and effect price hikes at regular intervals of every 2 to 3 years. The stock is extremely cheap despite the most recent price hike that was effected in the Manila South Harbor of 10% in 2024 and August 2024. The stock, despite that, trades at, and of course the 70% move this year, still trades at 9 times PE in a sector where stocks generally trade between 20 and 30 times if there are monopolies or duopolies. The most recent price hike that's been affected has been in the port of Batangas, which is about 16%. So that should help grow earnings in the future.
Got it. Thanks for that summary, Sameer. In terms of tariffs that the kind the US has imposed on trading partners,
right,
would very naturally have an impact on a business like this, especially in terms of trade flows. What's your current assessment of how this may impact Asian terminals?
Okay, so 2 points here on this. Firstly, the Philippines are a net importer of goods, and in fact now they are eyeing reducing import tariffs on goods to almost zero, for especially for US goods. And so that's the first point. And so largely the traffic that comes is inflow. The second is that the ports are mostly engaged in the import and export of very essential goods. So in a statement made by ICT, they've also said that they don't expect to be affected, or they don't expect their volumes to be affected much by the trade tariffs. And the other point here is that the companies have effected price hikes very recently. So the Manila South Harbor effected a 10% price hike in August 2024. As a result of that, with the steam of the price hikes affected, we are expecting 30% earnings growth in 2025 for the company. And in Q3, the which is it's around the corner anyway. So the company has effected a price hike in the Batangas port terminal, which accounts for about 20% of volumes. It's a 16% price hike in two phases, 6% of which is effected in 2025, and then the balance in 2026, which is 10%. So we expect that margins would expand, even though volumes could be low single digits. There could still be very good double-digit growth in profit for the foreseeable future.
Got it.
In addition to that, the company also pays a very handsome dividend yield. I just wanted to make a point on that. There's a 7% dividend yield for FY25 based on a 65% payout ratio. So I expect that yield to only grow.
Great. Well, thanks very much for the call today, Sameer. And listeners, do check out Sameer's coverage of Asian terminals on Smartkarma and tune into our next Smart Call. Thank you.
Thank you so much, Pranav. Have a nice day.
You too.